Shanghai precious metals markets reopen as we're going into our Asian session tonight. We also have news out of Mexico. And what is really amazing about the where, I guess you could say, this all of this turmoil is really taking place is this cartel member that was taken out. This area is the number one. Most of the silver mines are of the world, the largest silver mines of the world. Mexico is the largest silver producer in the world. Are all inside of that territory, interestingly. That also just happens to be a strategic mineral now for the U.S., which, coming in the next couple of days, we're going to find out how much more silver we need, given that, there's 1,400 ounces of silver in every single Tomahawk missile. Where's the supply? Why, there's a whole lot of questions there we're not going to, dive too deeply into, but lots of unanswered questions about that. Let's look at the ES here. Look at the longer term time frame. As you can see, the longer term weekly extensions are still going higher. We're still inside of daily traditionals. But when you drop down to a little bit smaller time frames, you'll notice that we're inside of a daily short. And what is fascinating about that daily short from our previous highs that we had back on the 11th of February is that this is when the jobs data number had our third data print higher. Now, the labor market is for many considered the best it's ever been. But when you look at the 4-week average, we have 3 prints that are printing higher here. And when the labor market starts slowing, the economy starts slowing, and then you have the markets roll over, which is exactly what we've seen. What is correlating with that is the VIX is inside of a pullback from its old contract lows to its new contract highs. And that swing high that we saw on the 11th correlating with the unemployment claims. Well, we are sitting down here in this massive support level here. All of these low ticks are what put in those highs. We'll look at all of these stick saves that we've seen inside of our long setups. We're still having to pay attention to them as we move forward here into this week. When we're thinking about this morning, it's important to note that we are in exactly the middle of a range. And the middle of the range is where things are dangerous. Looking at the gap fill statistics here for Monday, it's really important to note when there's an edge and sometimes more importantly, when there's not an edge. And right now, there's only a coin flip, a 56% probability of the last 90 days to fill a gap on Monday. Moving forward, 90 days, 47% probability. That's a coin flip. That's not an edge, is it? Now, over the last 30 days, there has been a higher probability of filling the gap, a slight edge on Mondays to a 75% probability. But that's only if we're inside of the 20 handle. Look at inside of the 20 handle, there's a 71% probability of filling the gap. Outside of the 20 handle, that's a 52. Well, that goes right along with our 180 and 90-day gap fill statistics outside of the 20. So we could say that inside of the 20, there's that slight edge, 71 and 75. Interesting, isn't that? Outside of the 20, there's a 52, 47, and 56. So if we were only looking at these numbers, we would expect that there would be a very interesting reaction at the 20 handle. Is there? Look at where the 20 handle is. We fell below those levels, and it has acted as a... This stream continues at eMiniAddict.com. The link is in the description. Join me there for tools and resources for learning measured move trading. I wrote the book on the measured move. Check out the hundreds of others that have learned trading plan development, pattern recognition, money management, and trading discipline with me to become the best, most confident trader that you can be.